Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin. Started with the micro bullish scenario where this is the low and we're looking for bullish market structure to eventually more upside. In this scenario, the invalidation of the bearish scenario is about 28k, so that is definitely an area where you want to see price going if you're on the bullish side. Now in this scenario, wave 1 over here then comes from the low. We have a long sideways wave 2 which retraced to the 0.886. Not really what you want to see, as the 886 is a rare target for a wave 2 but a common target for a wave B or a wave X, which increases the probabilities that the move we have to the upside here is part of a corrective structure and not an impulsive structure. Secondly, this move over here is a second wave 1. You can see it is the blue count in a wave 1, and then we're looking for a blue wave 2. Now the blue count is a lower degree count, as the blue 5-wave structure over here is part of the green wave 3, and then a 1, 2, 3, 4, 5 in green, and then in wave 3 we have the blue count as well. Preferably the second wave 1 in blue is shorter in time and in price compared to wave 1, but you can see this one is definitely longer in time compared to wave 1, which is not really what you want to see, because in a double 1 2 1 2 you actually want to see a 1 2 1 2 and then continuation where you create some sort of a diagonal, which is not the case. Secondly, also we didn't even take the high of this first wave 1, as you can see as well, which is definitely preferred in a double 1 2 scenario. However, if we at least look at this scenario, the common targets for wave 2 are between the golden pocket and the 0.786. As you can see, the golden pocket has been hit. It is a support area for price as well that we identified yesterday during the live stream. We have over here the golden pocket 786 area, the range value area low of this whole range, as well as this low over here, which can be interesting because price could potentially wick this low over here, grab the liquidity for then a continuation to the upside. But in this scenario in general, you want to see an impulsive move to the upside. You want to see volume coming in and big green candles to invalidate at least that bearish scenario. If we look at the bearish scenario, then this is what we're looking at. This is one of the two. We have a W, we have an X, and then wave Y finishing over here. Now the most common target area for a wave Y is between the 0.618 and the 1.236, taken from the low to the high of W to the low of wave X. Inside wave Y, we then have a zigzag structure, with this being a wave A, a wave B, and this is then a wave C. Most common target area for C is between the 1 and the 1.236, which as you can see has been very nicely respected. In this scenario, you then after wave Y want to see impulsive structures to the downside, because on the higher time frame we are then looking for a final wave 5 to the downside, where at least 24,750 is interesting because of the low that we have at 24,750, which is this low over here. And in general, on the higher time frame, we are looking then for an impulse to the downside, meaning you still want to see at least a fifth wave, which is an impulse by itself, meaning if this is the end of Y, you want to see impulsive structures moving towards the downside. However, from the high over here, you can clearly see some sort of a 3-wave structure, and it's very difficult to count a 5-wave structure in this move to the downside, and that is the main reason why I also have another scenario on the micro over here where we find upside once more to take this high. But in this particular scenario, wave Y over here is finished. We found rejection in the target area that we wanted, and we're going to be looking for price to move impulsively to the downside. Now, of course, currently we are at support. And then the other scenario I just shortly highlighted is this one over here. In this scenario, we are also either looking for a WXY or potentially a ABC, where C is then a diagonal. So you have an ABC over here, another 3-wave, another 3-wave, and then you create a contracting diagonal to finish eventually a wave C, but that's too early to tell, so I don't have it on my chart really. But then we have a W, an X, and we are looking for a 3-wave structure in a wave Y, where the support area where price is now is basically the last line of support. If price is going to dip below and start to close candles here, probabilities are going to be quite high to take the double bottom and also take this low. Now in this particular scenario, We then have over here a 5-wave move to the upside, where you can count this as a wave 4 over here. Very, very short though, so you can count this as an 1, 2, 3, 4, 5. Again, it can also be a 1, 2, 3, but then we have to think about potentially ending diagonal structures. A bit early to tell, but it doesn't matter for the scenario, as we're going to be looking for upside. This then as a potential 3-wave structure finished or another dip down, most common target area is between the 1 and the 1.236, which is, as you can see, the white box over here, which is very nicely respected, wicked inside, closed above. But again, we do have a bit of a double bottom here, low number 1, low number 2, so it can be interesting for price to find one more push to the downside, take the low and then move up. Also to hit the value area low of the range, because as you can see over here, the blue line at the bottom is in perfect confluence with the double bottom and has not been hit with this low to the downside. So this is definitely an area of interest for a potential swing failure pattern trade, meaning price wicks below, closes above, that's then the entry, looking for upside, stop loss below the low, and then of course observing the reaction, because that is very important. Now currently, as you can see, price is hanging around the point of control of this range, which has been a very important support resistance area throughout the whole range. However, another important area is this support resistance area, and I can recommend to put this one on the chart. Over here, it was support, resistance for a very long time, also here, changed it to support, broke once more, can act potentially as resistance to move down, and then hopefully you want to see price moving to the upside in this particular scenario. And also if you're bullish, of course, you want to see this structure or this support resistance area broken, get back above to then continue potentially its way for further upside. If we look at the CVD divergences, then at the high over here, after hitting that target area, remember, of wave Y in yellow over here, price started to create bearish CVD divergences. These have played out, the ones over here, as this low was the target, and you can clearly see we move beyond that target. Now more locally, we over here also had bearish CVD divergences, also already played out, but I just want to show you this to make you aware that there are bearish CVD divergences. And if we look at the chart at the moment, while recording, there are no bullish CVD divergences really over here, at least with this low. That is something to highlight. We have over here a higher low in price, but we don't have a lower low on the blue or the yellow CVD line. You could argue that with this low over here, we do have a higher low in price, and the CVD at this low, we do have a lower low on the CVD line. So can argue there is a bullish CVD divergence here that is still a valid low over here. It's not my preferred low, I suppose. This one over here, higher low in price, lower low on the CVD. I prefer to see CVD divergence with the actual lows, but you know, it is between lows, that's what CVD is, but we do have a bearish pressure, as you can see as well. So that's not ideal for the bullish scenario, and potentially the double bottom that we have could be a very, very interesting setup for a bit of a move towards the upside. If we then look at the probabilities of the different scenarios explained, then on the micro over here, the bearish scenarios in general carry more weight. So we are looking for eventually a move to the downside, either continuation to the downside or looking for that move to the upside. And if I look at the beginning of this move to the downside over here, where as mentioned, if we are looking for a fifth wave, you want to see an impulse, right? 1, 2, 3, 4, 5. But we never got a 4, we never got a 5. So just because of this structure over here, the Elliott Wave probabilities, because it's not about what we prefer or not, right? It's about what we see reading the chart. The Elliott Wave probabilities are higher to see a move towards the upside. Again, keep an eye on the double bottom. That's literally the last area of support. If this area breaks, we can be looking for price to move to the downside. No one knows what price is going to do. We can only play the probabilities. But from a probabilities point of view, this looks very three-wavy, which increases the probabilities. All of this is corrective and not impulsive for then eventually another move to the upside to at least take this high over here and possibly also take this high over here in this particular scenario. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.